Well, good morning, everyone, and a very warm welcome here in London this morning to our friends and co-hosts in Hong Kong. I'm absolutely delighted to be here today for the 29th launch of the Global Financial Centers Index. And we're delighted that this is being done in a truly global way. Despite things like pandemics, the great wonders of technology allow us to be together and to share some of the results today. Now, you'll know me. I'm Professor Michael Mainelli. I'm one of the directors of Zien, and I'm really only able to present things like this thanks to the generosity of our sponsors and partners. In particular, today, I'd like to thank Hong Kong for participating, but also, as ever, we are doing this with our dear friends, the China Development Institute. So it really is a truly global cooperation. Now, our program today is packed. We have a lot of things to talk about. We have saved some time for questions and answers, but in many ways, my job is to get out of the way. Let me just explain. Today, we're going to have a recorded presentation from Mr. Christopher Wei, the Secretary for Financial Services in the Treasury in Hong Kong. After that presentation, my colleague, Mike Wardle, who's the Director and Head of our Indices, will be presenting the core of the results. I'll be making a few short observations, and then we will have two responses. One from Dr. Yuling Chu at CDI, and one from Dr. King Logao at the SDC. So it's really quite packed and lots of time for questions and comments at the end. I might point out just a few things. First, please do use the question facility in the GoToWebinar room. That will have your email attached to it, so we can respond to direct and specific questions after this. The results will be up in just a few minutes online, the report. There is also a Chinese version that will be posted, thanks to our friends at CDI. The recording itself will be available later today, we hope, later today London time, early tomorrow in Hong Kong. So I hope that covers most of the basic housekeeping rules. And just on a personal point, it is amazing, having begun doing this research back in 2003, starting the index in 2005, I certainly never dreamed that we would be moving on to the 29th edition. Anyway, Mike, with no more ado, could you just quickly show the guests that we have today? And we're going to move to Mr. Hui's presentation from Hong Kong SAR. Mike, over to you.
Distinguished guests, ladies and gentlemen, I'm pleased to join the Global Financial Centers Index 29 launch webinar today, and I'm also delighted to share with you the latest development of Hong Kong's financial services industry. Before I start, I must thank the Zien Group and China Development Institute for surveying global market participants periodically and compiling the widely recognized Global Financial Centers Index. Through examining the results of the index, we are given the opportunity to understand how Hong Kong is perceived as an international financial center and how we could continuously improve ourselves. Given global financial markets are dynamic and fast-moving, feedback from the report will be very important and also valuable as we look for new opportunities to enhance our competitiveness. Comprehensive and superb financial services are crucial for an economy gearing for high-quality development. The value added of the financial service industry in Hong Kong accounted for 21% of our GDP in 2019. Its share of the overall employment increased from 6.8% in 2018 to 7.1% in 2019. Hong Kong has always been an offshore financial center for mainland enterprises and also an important conduit for international capital to enter the mainland market. The capital markets of Hong Kong and the mainland can complement and interact positively with each other. In the last report published in September 2020, Hong Kong was one of the top 5 leading financial centers in the world, rising by 1 place from the March issue of the index in 2020. And we were particularly recognized in the areas of business environment and human capital. For your latest results this time, we are glad to learn that Hong Kong is once again rising by 1 place and will be ranked one of the top 4 leading financial centers globally. We also note that the overall ratings of financial centers ranked among the top positions in the report will be very close. Hong Kong's financial markets have indeed performed very well over the last year. Despite challenges and uncertainties presented by the COVID-19 pandemic, our markets demonstrated resilience and robust performance in terms of IPO funds raised and trading volume. We ranked number 2 globally by IPO funds raised in 2020, amounting to over $50 billion and recording a year-on-year increase of 27%. In terms of average daily turnover in our securities market last year, the volume reached over $16 billion, representing an increase of 47%. Besides our traditional strength as an international financial center, this outstanding performance is attributed to the listing reform we introduced in 2018, allowing companies with weighted voting rights and pre-revenue or pre-profit biotech companies to list in Hong Kong. Leveraging the reform, not only is Hong Kong a preferred international fundraising platform now, it is also the world's second largest fundraising hub for biotech companies. Altogether, there have been 43 companies listed under the new listing regime in Hong Kong since its introduction, raising a total of over $54 billion and accounting for about 40% of the total IPO funds raised in this period. These companies have a combined market cap of over $1.4 trillion, accounting for about a quarter of the current total market cap of Hong Kong. They include 10 China concept stock companies returning to Hong Kong for secondary listing and 31 pre-revenue or pre-profit biotech companies. Our early efforts in enhancing the listing regime are gradually delivering results. Building on a good foundation, the Financial Secretary has recently announced in his budget a comprehensive plan to bring our market to a new level that would cover the development of green and sustainable finance and our bond market, and the consolidation and launch of 4 subsidy schemes, and setting out a blueprint for medium to long-term development of our markets. Having regard to Hong Kong's goal of achieving carbon neutrality before 2050, we will continue to promote the development of green and sustainable finance, encourage institutions to conduct relevant investment, financing, and certification activities, and attract top-notch institutions and talent to Hong Kong to provide the relevant services. We will join hands with the financial sector and relevant stakeholders to take forward the strategic plan announced end last year by our Green and Sustainable Finance Cross-Agency Steering Group, thereby leveraging our role as an international financial center to mobilize capital towards sustainable projects in the region and enhance our position as a green and sustainable finance hub in the region. We will first raise the existing borrowing limit applicable to government bond and green bond by over $12 billion respectively, such that there is room for the government to issue bonds regularly, having regard to market situation and demand. Bonds issued by the Hong Kong government are indeed very much welcomed by international investors, as we successfully offered the second batch of government green bonds totaling $2.5 billion in January, among which the 30-year tranche is the longest tenor bond issued by the government and the longest tenor USD-dominated government bond in Asia to date. Building on this good momentum, within the next 5 years, we will issue more than $22 billion of green bonds, and we will also pioneer the issuance of retail green bonds, such that the investing public can also participate in this emerging market. Through the active promotion of the government, Hong Kong's bond market has seen sustained growth, now ranking 3rd in Asia, excluding Japan, in terms of total amount of bond issuances. To further develop the market, we will enhance efficiency and capacity of the Central Money Markets Unit, the bond market infrastructure of Hong Kong, to support future commissioning of Bond Connect southbound trading, and also to develop CMU as an international major central securities depository in the long run. The Financial Secretary will also chair a steering group comprising us as the Policy Bureau, our banking, securities, insurance regulators, and our exchange operator to formulate a roadmap for promoting diversified development of our bond market, given that the global low interest rate environment will persist for a considerable long period, and many people in the community, especially the elderly, prefer investment options with steady and reliable returns. We plan to continue to issue no less than $3 billion of silver bonds and no less than $1.9 billion of I bonds this year. The eligible age of subscribing silver bonds will be lowered from 65 to 60. Next, I will cover our subsidy schemes. Recognizing the importance of green and sustainable finance as a global trend, the first subsidy scheme that we have launched is also targeted to develop this market. We will consolidate our existing pilot bond grant scheme and green bond grant scheme into a 3-year green and sustainable finance grant scheme to be launched in mid-2021. And the scheme will focus on green and sustainable financial products covering more product types, external assessments, and expenditure types. This scheme is expected to encourage more issuance of green financial products in Hong Kong, such that capital will be channeled to projects making positive environmental and social impact. The second scheme will subsidize open-ended fund company OFC, and it is the fourth step that we take to develop our fund market further to the early establishment of new fund structures, provision of tax concessions for carried interest, and legislative proposal to allow re-domiciliation of funds. The scheme will provide subsidies to over 70% of the expenses paid to local professional service providers for OFCs set up in or re-domiciled to Hong Kong in the coming 3 years, subject to a cap of about $130,000 per OFC. We are confident that the scheme would encourage the setup of more OFC in Hong Kong and consolidate our role as an international asset and wealth management center. The third scheme would subsidize REITs, real estate investment trusts, and cover 70% of the expenses paid to local professional service providers for the listing of REITs in Hong Kong, subject to a cap of $1 million per REIT. This would allow Hong Kong to capture the opportunities offered by listing of REITs with mainland real estates or new infrastructures, for example, logistics and IT as underlying asset. As interest rate is expected to stay low for a more prolonged period of time, and as we face an increasingly aging population, REITs as financial products would offer the public an additional investment option for the purpose of retirement planning. The fourth scheme will subsidize issuance of insurance-linked securities, for example, catastrophic bonds by insurance companies or other institutions in Hong Kong, and the amount of grant for each issuance will be kept at around $1.5 million. Also, to develop Hong Kong as an insurance and international risk management center, we are currently undertaking a series of legislative work to provide for half-rate profit tax concessions to eligible insurance businesses, including marine insurance and specialty insurance, expand the scope of insurable risk of captive insurance companies, and enhance the group-wide supervision framework. We are also preparing for the implementation of a risk-based capital regime for the insurance industry to replace the rule-based capital adequacy regime. Besides offering subsidies, we will also plan ahead to enhance the competitiveness of our market, expand our various connect programs with the mainland market, and set our blueprint for further development of our own market. With regard to the securities market development, the stock exchange will review the overall secondary listing regime, including whether Greater China companies with non-weighted voting rights have to be companies in the field of INT and to seek secondary listing in Hong Kong through the new concessionary route, as well as the market cap requirements. Moreover, we have noted a new trend of special purpose acquisition companies, SPACs, in the global financial market. Our regulated stock exchange would explore suitable listing regimes in view of this new trend to enhance the competitiveness of Hong Kong as an international financial center, while at the same time safeguarding the interests of the investing public. Hong Kong is known to have launched a number of connect schemes, allowing efficient access between the mainland and international capital markets, covering both stocks and bonds. These Connect schemes have been very successful, as demonstrated by usage statistics. For Stock Connect, we noted average daily turnover increased by 119% and 126% year-on-year respectively for northbound and southbound trading in 2020. Bond Connect has also reached record volume in 2020 and is now providing access to mainland interbank bond market to over 2,300 market participants. Having regard to the successful experience of these Connect schemes, we have planned to expand them and to further enhance the role of Hong Kong to connect the mainland and international capital markets. For Stock Connect, there will be progressive inclusion of ETFs and other types of assets, as well as expansion of the scope of eligible securities. Also, to cater for the increased allocation from international investors into the mainland A-shares market and the resulting risk management demand, our exchange operator will accelerate the preparation for the launch of A-shares index futures contract in Hong Kong. For Bond Connect, our banking regulator and the People's Bank of China have set up a working group to drive the southbound trading initiative, with the target of launching it within this year. Last but not least, Hong Kong can contribute more proactively to our country's dual circulation strategy. The FSTB, together with HKMA, SFC, and IA, has set up a joint working group to explore how Hong Kong can complement the economic and financial development of our country and meet the needs of international investors, and examine how to further enhance Hong Kong's competitiveness as an international financial center on the basis of our existing capacities. It will set out the development blueprint and our forward concrete proposals and measures for engagement with central authorities and to secure their support. To conclude, I would like to thank Ziyan Group and China Development Institute once again for their work in compiling Global Financial Centers Index. I also note that our own Financial Service Development Council, FSDC, in Hong Kong is a member of the Vantage Financial Centers Networks supporting the work on Global Financial Centers Index. We look forward to further cooperation with all of you as we seek to continuously improve Hong Kong's status and role as an international financial center. Thank you.
Well, thank you very much, Mr. Hui, for those very perceptive remarks and those announcements about Hong Kong. And we are delighted to have an overview there. We'll be hearing more, of course, from FSDC in a moment. But now, Mike, over to you, the man who does the hard work and leads the team for the results. Thank you.
Thank you very much, Michael. For those who don't know me, I'm Mike Wardle. I'm the Director and Head of Indices for the ZN Group and take a lead in developing and writing the Global Financial Centers Index. And the index is part of the work we do as part of the Long Finance Program run at ZN, which is seeking to answer the question, when would we know our financial system is working? And this is why we do longitudinal research, looking at change over time, because we're interested in how finance and financial centers can make a difference in the world. The GFCI is a factor assessment index. This is a way that we use to look at data. It combines two different sets of data. One, survey data, asking experienced professionals their views about financial centers, and sets of quantitative data, which we combine using a machine learning algorithm, which looks at the correlations between people's views and the quantitative data which underlies that. And we are able to use those correlations to predict how an individual would rate financial centers, even those that they don't know personally. The GFCI now covers 114 financial centers across the world. It was 47, I think, in the first edition back in 2007, but now it's 114 with 12 other centers that we are tracking and who may well enter the index at some point. And I think the point here is that being a financial center is seen as a key driver to local economies, to countries' economies, and to supporting trade and commerce throughout the world. Just looking at who it is who gets involved in the GFCI in terms of those who respond to the survey that we run. First of all, to say we really do have a broad range of people across financial services sectors who take part. Generally, we have people across banking, fintech, government and regulatory, insurance, investment management, and that gives us some confidence that we're reaching the right audience. Secondly, the respondents by region. The great majority of those who respond to the survey are now from the Asia-Pacific region. Some 67% of respondents are from that region of the world, I think, which demonstrates, first of all, the financial and economic growth there has been in Asia-Pacific, but also the tremendous interest there is in the development of financial centres for the future. So the results of the index itself. First of all, a brief look at the top 20 centres in the GFCI 29. London and New York are still at numbers 1 and 2, but New York hangs on very clearly to the top place. London has dropped back in the ratings, though hangs on to second place. And there's very close rating differences between London, Shanghai, Hong Kong, Singapore at the top of the table. Looking at regional performance over time, we take here the top 5 centres in each region and take an average of their ratings. There's been a slight falling back in GFC 29, the leading regions. But the point here is that Asia Pacific has been leading this analysis for some time, with a number of centres now firmly established at the top of the rankings. Looking at the top 5 centres in the index and their ratings over time, what we see is that London fell back a bit here, and as I said, there's very close performance between London, Shanghai, Hong Kong and Singapore. But the key message here is how much more competitive the top of the index has become over time as the ratings have narrowed and performance has improved so that people are catching up. And the story in terms of ranks over time really is the story of Shanghai, who is now firmly established in the leading centres in the GFCI, taking third place again in this edition. But you'll see also Hong Kong, Singapore, along with New York and London, are really firmly established at the top of the table, and that's the target for other centres to address. Taking a regional analysis, a brief look at Western Europe first of all. London, as we said, retains its first place. Frankfurt has moved into the top 10, moved back into the top 10 in this edition of the GFCI, and we suspect that is a benefit of the UK leaving the European Union. Luxembourg had performed well in the last edition of the index and is still firmly in the top 20. So we're looking very closely to see whether London's position holds up against increasingly stiff competition. In Asia Pacific, just noting here Hong Kong, of course, in 4th place, and showing that across the top of the GFCI, we now have a large number of Asia Pacific centres firmly established in the top 10 and the top 20 of the index, and we expect that to continue. In North America, we have mixed results for North American centres, but generally doing well and holding their own. San Francisco just fell out of the top 10 this time, but may well be back. In the Middle East and Africa, Dubai hangs on to its leading position, although drops very slightly in the ratings. And just to note that Casablanca remains the leading African centre, although African centres in this edition did take a slight hit. In Latin America and the Caribbean, the centres in this part of the world bounced back after some quite significant falls in GFCI 28. There's a renewed confidence in the region, but still trailing in terms of the global rankings with the British Virgin Islands at 58th in the world, the leading centre in Latin America. Turn to Eastern Europe and Central Asia. Moscow has performed well in this edition, but again, very similar to Latin America and the Caribbean. This sector, or this part of the world, trails slightly in terms of its performance against other regions of the world. Within the GFCI, we characterize financial centers in 12 different sectors, global, international and local, and then these 4 sectors you can see across the top: broad and deep, diversified, specialist and contenders. And what we see is that increasingly the leading centers in the GFCI fall into the broad and deep category. In other words, they've developed the quality and the range and breadth of their financial services, and they are global because they are well connected with other centers across the world. And Hong Kong, of course, falls clearly into this category. One of the analysis we do is to look at the index by running the model separately, using only the survey responses that come from people working in different industry sectors. We show here the rankings that come out of this. You'll see some interesting results. New York, of course, does well pretty much across the board, but people working in insurance rated Shanghai, Singapore, and Beijing above New York for insurance, which is a tribute to what's been going on in those cities. You'll see that Hong Kong here rates variously across the industry sectors, and it is of interest to financial centers to look at their profile in this kind of analysis to see where they may need to make more effort or to improve their reputation. Talking of reputation, we can also run an analysis of reputational advantage. What this does is take the raw assessment results from the survey we run against the overall rating that comes out of the index process. Many of the top centers in the index, Singapore, London, New York, Shanghai, Beijing, Hong Kong, are in the top range in terms of reputational advantage. This means that their reputation gives them an advantage in terms of the GFCI rating. Other centers have very high reputational advantages, places like Gift City, Gujarat, and Qingdao, which suggests that they are marketing very well what they do. At the other end of the scale, we can measure reputational disadvantage. So this is the negative reputational advantage. And the centers on this page are the ones that we believe are actually doing better than their reputation would show. So if people only knew how good they were, we think they would be scoring higher in the GFCI and in the assessments. So there's a task at this end of the table for people to market more successfully what they are doing, because people at the moment aren't aware of just what good quality work is going on in those centres. I'm going to hand over to Professor Manelli in a moment, but just to say that we look across a range of areas of competitiveness when we develop the GFCI. We believe it's important that centres are good at business environment, human capital infrastructure, financial sector development, and reputation if they're going to be a truly leading centre. And I'll leave you with that thought.
Well, thank you very much, Mike. I just want to draw a few points of attention to some of the great detail that's provided by this index and by the surrounding work to it. I'd first just like to point at areas of competitiveness. And one of the great things here launching with Hong Kong is to see how strong Hong Kong is across the board. This has been an observation of ours for many years, that to be a truly global financial center, you have to be good in almost all the categories. Specialist centers hit a limit, and Hong Kong has clearly broken that many years ago, to be honest. But it is interesting to see that huge amount of strength. Second thing I'd like to point out is that there are genuine changes in the index over time. And I've picked on 3 centers just for a quick look. And I believe that those of you doing research in this sector might like to have a peek at some of this as you're moving forward. I mean, the first is Frankfurt. Clearly, with many of the changes that we've witnessed in Europe, particularly with regard to Brexit, the departure of the United Kingdom from the European Union, because of Brexit, we've seen a lot of change. And here it's very clear that Frankfurt is moving very, very fast on banking and the regulation associated with that, with the European Central Bank, for example, being based in Frankfurt, has led to that enormous change. Second center you might have a look at, just for variety, would be Sydney. One of the intriguing things about Sydney, of course, has been a huge improvement, at least as seen by people in the industry, in the government and regulatory environment there. And this has again led to most of its changes in its competitiveness rank as it zeroes in on leading. And finally, I might point to Hong Kong, our co-hosts today, where there's been general improvement as we've seen. But in particular, I might pick on, as did Mr. Hui in his remarks, insurance, with Hong Kong emerging very strongly as an insurance center, much to the interest of those of us in London who live less than half a mile from Lloyd's of London. So those are just some things that you can see in terms of there is really rapid change going on in this area for those, once you look just beneath that top level of who is who. We spend too much time, I think, on the absolute ranking in GFCI and not as much on some of the detail. And I'd encourage you to explore that detail. And that leads me into 2 areas I'd just like to bring to folks' attention. There's a bit of a blurring, I feel, in two areas. One is the use of technology, and the second is what do we mean by a financial center, both of which are important to us here at CN looking ahead. On the first, I point you to the fact that we do have a fintech ranking. This is outside of our Smart Centers Index, which is looking at technology in the round. This is just on fintech. Hong Kong scores very, very strongly here, as you can see. But it does shake up the rankings a fair bit here, where sectors like Shenzhen rise quite significantly. San Francisco, as you might expect, Tel Aviv, for example. And what is intriguing here for me is that we're not just seeing fintech, but we're also seeing tech fin. And this blurring of technology and finance might be a very deepening trend for us as we're conducting our work. The second trend I might point to is about clustering. As we look again around the world, this next slide shows that one of the things that you're finding is that people are moving to work from home. Now, this is a fairly obvious thing to all of us during COVID-19. Those of us who had more severe lockdowns, I've been at home for some time working, are certainly experiencing this. But what was interesting is when we asked this question 6 months ago, it was not as pronounced in Asia Pacific, for example, and other regions. And what's happened has been that in Europe, most people believe there's going to be quite a significant shift to working from home. And that was, as it turned out, in the last index. But since the last index, there's been a greater swing in Eastern Europe, Latin America, even North America, to people believing that working from home might be a more permanent fixture of financial services work going ahead. Of course, this leads us here at CN and CDI to question how will we be defining these centers going forward without the convenience of a delineated line. And I think we're seeing this in areas like China with just today's launch, but also, of course, the Bay Area concept of Guangzhou, Shenzhen, and Hong Kong. So a lot out there, and I just point to those 2 particular trends of fintech blurring with wider technology, and also the concept of a financial center changing. So with that, I would like to hand on, if I might, to our next guest, which is Dr. Yu Ling Chu, our colleague from CDI, who's going to address us from Shenzhen.
Distinguished guests, ladies and gentlemen, it is my great honor to be here to share with you the performance of China's mainland city for the GFCI 20s. And we are working with UK Wising for quite a long time. And we notice a very important trend, that is, in China, we have a rising financial center as a cluster. This is not only a concern for the financial industry in China, and you know that more and more international think tank and financial institutions and the financial practitioners also pay attention to the China's mainland financial center development and the corresponding opportunities that we can discover. Next slide, please. Next slide. And you can say that in China, currently we have 12 cities that have already been included into GFCI. Shanghai, Beijing, and Shenzhen rank as the top 10 centers. Guangzhou, Chengdu, Qingdao, and ranked as top 50 financial centers. But according to this table, you can also see a clear polarization of the cities. Hangzhou, Tianjin, Dalian, and those cities, the ranking is beyond the top 100, and this is a general ranking for mainland cities. Next page, please. This is another slide in showing you New York, London. Those top financial centers are clearly seen on the table, but still for mainland China cities, we have a big room to further leverage our potentials to catch up with those world-class financial centers. You can see for New York and London, on all criteria, they are ranking at the top 3, where for domestic China cities, only Shanghai can rank as top 3 in terms of infrastructure. Next slide, please. Just now, our London friend also mentioned about the reputation advantage. And let me just explain to you. Actually, we use the score from the question now, and the difference between the question now and the comprehensive study to help to assess the reputational advantage of a city. And according to GFCI 29, we clearly understand international investment community pay much attention to the potential of mainland China cities, for example, like Shanghai, Guangzhou, Shenzhen, and Qingdao. The reputational advantages of those centers being ranked as top 10 in the international community. This also shows our expectation over those cities and their performance for the next coming years. Next page, please. Well, from the ranking, we can also see another result. FinTech has already become a very good bonus for the mainland China cities. So besides the traditional criteria in GFCI, will also include FinTech and green finance as new criteria for the ranking. And you can say that for the FinTech ranking for domestic China, the ranking is much higher than the comprehensive ranking for Shanghai, Beijing, and Shenzhen. They are ranking as top 3, top 3 and top 4 in the international community, which is well performed compared with other international financial centers. Next slide, please. Next slide, please. And just now, and we heard from our London friends in talking about the importance of Hong Kong. Shanghai is also the most important financial center in mainland China, and Shanghai used to be catching up with other international players, but now Shanghai is already well-performed in international financial business. In the past, compared with Hong Kong and Singapore, Shanghai is underperformed, but with the newest release, and Shanghai has already outperformed Hong Kong and Singapore and started to narrow the gap between itself with London and New York. Next slide, please. And at the very end of my report, let me also share with you the fast rising financial center in domestic China, that is Shenzhen. You know that no matter for the environment or reputation, Shenzhen is making big progress, especially from the down bottom right. You can also see that the financial development of Shenzhen is ranking as top 4 in the world, especially fintech, green finance. These are all bonus to Shenzhen's financial development. So I can safely say that Shenzhen is still going to have a promising future for the future in financial development. Thank you very much. Thanks for your listening. That's the end of my presentation.
Thank you very, very much, Dr. Yu. And we would like to thank you for that work. And now, if I could, I'm delighted to hand over to Dr. King Lun, who's an executive director and board member with the Financial Services Development Council, to make some remarks about Chinese financial centers. Dr. King Lun.
Thank you. Yeah, thank you so much. We have seen a lot of numbers and a lot of detailed analysis of the report. But I still want to share some numbers with everyone. We're very excited about this Greater Bay Area concept. And I want to highlight this is, again, another opportunity for Hong Kong to further expand our international financial center status. As we all know that Hong Kong has been a super connector, right, for mainland China and the rest of the global markets. But there is this another exciting opportunity coming up. So I said I wanted to share some numbers. So here they are. The Greater Bay Area, first of all, comprises 2 special administrative regions of Hong Kong and Macau, and 9 municipalities of Guangdong province. So altogether, we have 70 million people. And you know how big 70 million is? More than the population in the UK. And in terms of GDP, it's 1.7 trillion. And again, how big is that? That's the size of Canada. And in terms of surface area, 56,000 square kilometer, that's more than 3 times the size of San Francisco Bay. So here, my colleague, Chris, mentioned Stock Connect, Bond Connect earlier. And here, for GBA, we can also talk about Wealth Management Connect. It is allowing overseas managers, service providers, one day to sell their products into the Greater Bay Area. And vice versa. We can offer products manufactured in Greater Bay Area to the rest of the world. And so this can open up a huge opportunity. And now, coming back to the Chinese financial centers, we're delighted that we have 2 of the top 4, that is Shanghai and Hong Kong. And among the top 10, we have, 2 more. So that is really very exciting for us. But the role Hong Kong can play is really the international aspect of it. We have a common law system, we have a world-class infrastructure, and a very deep talent pool. And very importantly for financial market, liquidity and product complexity, risk management tools. We have those readily available. So this super connector role, we believe, there are many, many opportunities ahead for everyone that, who are interested in the growth of China. And I would also like to emphasize that is not just China. Hong Kong can be a platform for the whole region, right? Because we already have the most successful IPO markets in the region. And as Chris mentioned earlier, and in terms of the size of our asset management industry, also we are the largest in the region, and just behind Switzerland as the largest private wealth management center as well. So it's not just this. No, we are also taking the lead in some of the more important global development trends. such as ESG. Again, Chris mentioned that earlier. We again have a very important role to play. That is, going back to a connector role, how we can actually reach or acting as a bridge between mainland China and the rest of the world, especially Europe, in terms of taxonomy. I'll stop here because I can carry on for a much longer time, but I think we have seen we have heard a lot of very detailed analysis. Maybe we can leave time for the Q&A.
Dr. King-Lun, that's fantastic. Thank you. And in fact, we do have a lot of Q&A, and if I may, I'd like to direct the first one to you. So we have Verena in Germany, and she is curious, going on your theme of the superconnector, how important is the EU-China comprehensive agreement on investment to you in this regard?
That's a great question. This is very important. Again, we believe we can play a very important middleman role because, as I highlighted earlier, we have a common law system that is well practiced and accepted by global investors. We have the infrastructure, and that's where we believe we can contribute to this important strategic development.
That's super. I have a question here for Dr. Yu. Fantastic. There we go. Dr. Yu, we have Ian in London is curious, how important has fintech been to the rise of Shenzhen? Is it really just a specialist center? Dr. Yu? Oh, apologies. Well, I'll move on if I can while I just wait. I'll repeat that question to Dr. Yu in a moment. But if I could, we have a question here from Bob McDowell, and I believe this is directed to you, Dr. King-Lun. It would be interesting to hear more detail about the development of the captive insurance market in Hong Kong in terms of demand and projected growth.
Right. I'm glad to see from your report, Professor, that insurance as a sector scores very highly for Hong Kong. In fact, we are looking at the whole development of the insurance sector very holistically. We are looking at, in fact, even the policy, the budget speech that Chris mentioned earlier. We have mentioned the insurance-linked securities market. So definitely, we want to make sure that we provide the fundraising platform for insurance companies for matching their liability. Everyone now is familiar with the concept of catastrophe bond. I hope we won't have another pandemic like COVID-19. But there will be natural disaster. How do we hedge those risks? We want to provide the capital market infrastructure for fundraising, for risk management. So insurance definitely is a key sector for us. As I mentioned earlier, we do want to provide a fundraising platform for the whole region, if possible.
Maragtas from the Philippines in Manila thanks you very much for the event and for hosting it. And he's very interested, in the Philippines. Has a lot of work to do to catch up. Priority is, connectivity as well as systems and infrastructure to further develop financial markets, including the untapped potential of the Philippine regions. Do you have any advice and recommendations for countries such as the Philippines nearby to Hong Kong and China?
Sorry.
Any advice you might have for regions in the Philippines and how they might relate to financial development, increase their financial development by working with China?
All right. Okay. Yes. Yeah, definitely. There are two ways, I believe, global investors can look at China. Definitely, a huge domestic market. For those who want to tap into the domestic market, I think definitely, they consider establishing a local presence there. So if you're talking about financial investment, there are ways you can do that. Or alternatively, you can look at Hong Kong as a stepping stone, whereby you can go through Hong Kong and establish Hong Kong as a stepping stone into the mainland China, because to begin with, the system, the infrastructure, might probably be more familiar to you, but over time, you can expand your local presence. It's quite common. In fact, if you look at, say, a huge market like the US or even the UK, it's very common for companies to have multiple offices in the country, in major cities, right? And in the case of China, I mean, definitely Hong Kong is one that is right up there for consideration because of the reasons I just mentioned, familiarity. But in terms of the size of the market, obviously, it's where the domestic China can offer. So therefore, it very much depends on the stage of your investment consideration. But I would say it's not a binary decision. I think it's beneficial to have multiple offices in a big country like China, just like what most companies would do in a big country like US, Canada, Europe.
Yeah, so it's always very interesting, that federal distinction amongst nations or supranational centers. This is a question for you, Mike Wardle. It's from Anthony Rowley, who's with the South China Morning Post and also Asia Asset Management in Tokyo. And he would like to know, how do you assess the chances of FinCity Tokyo in seeking to make Tokyo a more attractive financial center in Asia, especially in terms of its fund management capacity?
Yes.
Yeah.
Definitely. Yeah. Sorry. Yeah.
I think that there's great competition amongst leading Asian financial centers. And I know that Tokyo and FinCity Tokyo have been doing a lot of work to analyze the financial ecosystem in Tokyo to start addressing areas for development. In terms of investment management, as in all financial centers, there's the need to achieve a balance in terms of the regulatory structures and the operational structures around communication, around the standards for reporting, to make sure that there's good dialogue between asset holders and asset managers. And I think the depth of analysis that FinCity Tokyo has been doing stands them in good stead in addressing that and getting the balance right between regulation and support for the financial service industry.
Dr. King Leung Zahir, who works with Lloyd's of London, is curious, will London remain an important financial partner for Hong Kong and the rest of Asia, particularly with regard to insurance?
Oh, yes, definitely. I think, we would like to see the whole of Europe as one big market. So UK, because of its advanced infrastructure, I think, yeah, definitely it still has a lot of strength and attraction. So definitely, we want to explore further collaboration opportunities. When it comes to insurance market, yeah, definitely, we already have some very successful insurance company, from Europe operating in Hong Kong. So I believe, we can deepen that collaboration. Just like what I mentioned, the insurance-linked securities market, we can, make it as an Asian time zone hub, and vice versa. London, Europe can have an opportunity to create a hub in the European time zone.
Mike, this is a question for you from Narayanan Sumasundaram. Seeing that Hong Kong has risen and Tokyo slipped a bit, do you have any particular bilateral insights into what happened that drove Hong Kong's rise and pushed Tokyo down?
First of all, to say that, as I said in my main presentation, the margins are very close between centres at the top of the GFCI index. So from addition to addition, I wouldn't read too much into the fact there's been small changes in ratings between centres. This is very much a longitudinal research project, and what's important is the long-term trend. That said, I think that the kinds of factors which are likely to have affected the reputation of Tokyo as opposed to Hong Kong is that there is a question still amongst international investors about how open the Japanese market is, and how good the skills are, particularly in terms of language skills, in a business which is mostly conducted in English. And so I think there's going to be a tension for some while between Tokyo's aspiration to be right at the top of the table and leading in Asia, and the time it'll take just to develop its human capital in particular to be able to operate on a truly global level. So I think that there's a very slight differentiation there between Tokyo and Hong Kong, but I think it's probably enough to make that slight difference in the reputation and achievements of the two centres.
Dr. King Lun, Yiling Ding observes a fairly large movement of funds from Hong Kong to Singapore. Could you elaborate on the reasons for that and how you see this going forward, perhaps preventing it?
Sorry, can you repeat the question? I didn't get that clearly.
Yiling Ding sees a large movement of funds from Hong Kong to Singapore. You may not agree with that, but can you elaborate on the reasons and what you're thinking is going forward?
I think Hong Kong and Singapore are two very important financial centers in Asia. As I alluded to earlier, when people make business decisions, it's not binary. It depends on what they look for. Hong Kong and Singapore, we all have our own competitive strengths and weaknesses. So I would say it is complementary. So it very much depends on what investors look for. And I can highlight again the strength of Hong Kong being a super connector to mainland China, and the benefits of that is not just an access to a vast market, but also because of the benefits of our liquidity, our infrastructure. We can hopefully be a regional financial center servicing other type of investors and companies, fundraising for fundraising purposes, for example, and risk management as well.
Mike, Eddie Young is asking, how would Brexit change the position of London? And he's very, very curious about that. I also have a few other questions related to whether or not you see London continuing to fall in the indices, or whether you believe this is temporary.
Yes, I think we don't have a definitive answer to the question yet. I think is the first thing to say. Although London's rating fell in this edition of the index, it rose in the last edition. And as I say, the longer term trend is what's important. But New York has now held the top position in the index for a number of editions, after London had held the top spot for quite a while. And so there was a sense that London has lost some of its reputation and strengths compared with New York as its main world competitor. The question is whether that continues in terms of a trend, and whether London loses its second place in the rankings at some point. And as I mentioned in my presentation, there's now only 1 point between London and Shanghai, 1 point between Shanghai and Hong Kong, 1 point between Hong Kong and Singapore. It is very tight, and London, I think, is at risk of being overtaken by another financial centre. We also see some positioning, I guess, within the EU centres and Swiss centres, and the strengths of Frankfurt, Luxembourg, Amsterdam, are coming through. They have taken some business from London, and we'll have to see whether that is a continuing trend. And so I think it's probably too early to say what the impact of leaving the EU has been. This, most of the data on which the GFCI was based is current at the end of 2020, rather than being current at this moment. So we'll be watching very carefully in the next two editions of the GFCI to see whether the reality of leaving the EU starts to have an impact on the data which underlies the index.
Well, Maximilian Bierbaum makes an observation that the factors that have caused London to drop from second to third place are principally the business environment and the reputational and general areas of competitiveness. So thank you for that, Maximilian. A question to you, Dr. Kinglund, from Martin Watkins in London. He's curious if you could, do you believe that the adoption of digital assets, new regulations, and the introduction of a central bank digital currency, which has all been going on in China, how is that going to have rankings? What effect do you think that might have on the ranking of cities in China as financial centers?
Yeah, I think first of all, talk about virtual assets first. I think this is inevitable trend, with the advance of technology. And I think the blockchain technology is very much ingrained into our financial market now. Virtual assets, as a lot of experts here know more than I do, but basically it is just a securitization of assets, right? Or in a digital format. So in Hong Kong, the Securities and Futures Commission recently issued the very first virtual asset trading platform license in Hong Kong. So it signals that this market is here to stay. So obviously, regulations in terms of investor protection is important. And that also brings on to the concept of digital currency. So this, again, I would say it is a natural development. Now, e-wallet is so common. Obviously, the e-commerce market in mainland China is very advanced. But even, other parts of the world, people are very familiar with it now. Especially with COVID-19, more people are using digital payment methods. So I say this will definitely be a major trend globally. We know a lot of central banks are looking into this development. So because the e-commerce environment in China is very mature. So I think China, the introduction of the ECNY is now being in the testing stage. So we are all watching this development. Yes, it truly will bring financial inclusion to reality. Right. So there are a lot of. I think to me this will be a big contribution to the development of our society. Helping the underprivileged to have access to financial services.
Yes. Now we're watching it with great interest. That's for sure. It's a very intriguing experiment, and a sign again that of how things have shifted over the many years of the index. That people in the West are looking for the technological innovation in finance coming really from Asia. Mike, a political question here. Kevin Lee is curious. He says that the Heritage Foundation recently merged Hong Kong with China in its economic freedom rankings. He was curious, what might you think this is going to do to Hong Kong's ranking going forward, particularly in terms of industry subsectors such as government and regulatory? And did you have any color on that?
Yeah, thank you. As you know, there's over 140 measures now taken into account in the GFCI. And so the direct impact of one of those individual measures is unlikely to be huge. But that said, there is an issue, I guess, around some of the indicators, the quantitative indicators, which deal with open government, with freedom, with government effectiveness. That reputational group and some of the business environment group, where it is always going to be difficult for Chinese centres, I think, in the current system to move towards the top of those rankings. And so it does have an effect on the positioning of Chinese centres and Hong Kong, in that an open and free system of economy and law is seen as a very attractive proposition to people wanting to bring inward investment into financial centres. So the individual change, in terms of the Heritage Foundation's scoring, may not have a great difference, but the overall position is that financial centres that have more freedom in terms of law and government effectiveness are likely to perform well over the long term.
Dr. King-Loon, Tim Lam is very interested in your thoughts, and I think it's spurred on by your comments earlier about multiple centres, and particularly with your perspective from Hong Kong. Do you see the future development of financial services across China as being one of centre specialization or competition across more broadly based financial centres?
I would say it is complementary. Take, for example, we talked about GBA earlier. It really is a hub of technological innovation in China, right? And Shanghai, with its history, with its infrastructure, is definitely a major financial center, but not necessarily focusing on just technology. Right? And Hong Kong, as an international financial center, really tries to bring the best of East and West together. It's a big melting pot. So, we all have our strengths and weaknesses. I said, no one is perfect. But, the key to me is how we work together in partnership to grow the pie bigger for everyone. And also, most importantly, the benefits of all the stakeholders.
Dr. Yu, if you were able to get to the microphone, I just wanted to return to that question we had earlier, if you had a moment. And that was very much along the lines of how important has fintech been to the development of Shenzhen? And I think that relates to some degree to Dr. Yu's comments here about specialization. Is the future of Shenzhen that of a fintech specialist, or are there aspirations to be a much more broadly based center?
Actually, I'd like to use two cases to answer your question by illustrating two Shenzhen cases. The first company is Ping An Insurance Company in Shenzhen. Ping An Insurance Company is a insurance company with the highest market cap in the world. And for the past few years, its policy volume increased by more than 10 times. But the employee number never increased for the past 1 decade. Ping An is leveraged the technology to replace the manpower to improve the working efficiency for the insurance agents. According to the World Institution for the Insurance Technology Patent, Ping An is the company with the largest patent in the insurtech industry. So you can clearly say that for financial institutions in Shenzhen, they are leverage fintech to improve their working efficiency and competitiveness. And the second case I'd like to share with you is WeBank in Shenzhen. WeBank has no branches or outlet besides Shenzhen, and in Shenzhen they only have one physical outlet. But you can say that the source of the funds and the source of the client of the WeBank comes from all of China, covering more than tens of provinces in China. Financial institutions in Shenzhen is leveraging fintech of broaden their business scope and it further improve their influence. So by these two cases, you can see fintech has already become a very important driving force for Shenzhen to become an international financial center. And so I hope these two cases can answer your question. To some extent, you also asked about the specialization of Shenzhen in the near future. You know that I myself is responsible for the 40th five-year plan for Shenzhen to become an international financial center. We clearly indicated that Shenzhen would like to build as a world-class fintech center in the world. And now we already have a lot of financial institutions leveraging fintech to improve their work efficiency, and they also give valuable output. For example, their business model, so that they can take more market share in the international arena. So Shenzhen is going to better consolidate our advantages on fintech, so that we can build ourselves into an international financial center specialized with fintech. Thank you.
Thank you very much, Dr. Yu. That's very kind of you. I'm going to take just one final question in the time available. That's from Amanda Wong, and I think it's directed at you, Mike. How much was the pandemic a factor affecting the rankings of the centers? And also, in your opinion, as we move out with vaccination, do you have any projections on what it might do to rankings in the future?
Okay, a big question, but I'll do my best, Amanda. First of all, the effect on the rankings of the pandemic, I think, has been on the reputation really of economies rather than necessarily financial centers. Governments that are seen to have done well in managing the effects of the pandemic, for example, South Korea, have seen an improvement in the scoring given to the financial centers because the underlying economy is seen to be a safer bet. So, for example, Seoul and Busan in South Korea have moved up in the rankings in this edition, and I suspect that is to do partly with the success of Korea in managing the pandemic. So there has been that kind of impact. More generally, we've seen the centers at the top of the index rating fall back in the ratings. And we think there's just a general lack of confidence, potentially, in the future of the world economy, because people aren't sure what's going to happen as we come out of the period of the pandemic. With vaccinations, of course, things will start to reopen. The question is, how will it be different when it reopens? We've demonstrated, I think, over the last year that there are many occasions where, in the past, people would have flown around the world to meet together to gather, and we've demonstrated that is less necessary than people thought it was. So I think the whole concept of what a city is, how important it is to gather in person for events and for meetings, has shifted. And I think the centres which do best going forward are those that manage to blend properly the new opportunities offered by digital business and the traditional strengths of good reputation, sound management going forward.
Thank you. Well, we come to the end of time, and therefore our final slide. I'd like to, if I could, make just a few very brief remarks. The first is what an amazing world it is, and there are some advantages to the pandemic, as we've seen in changing attitudes towards business travel and video conferencing. We've had 450 people, or more than 450 people online this morning and this afternoon, which is a real change in the times. And I think that CDI and HKFSD and Zien are delighted that we don't have to pick up the tab at the wine bar afterwards. So that's one of the good things, I guess. But we'll be very happy to pick up the wine tab at a future event when we all manage to get together physically. Second thing I'd like to do is to thank very much the audience today. What an enormous audience, and what really pertinent and sensible questions. And thank you so much for sending them in and participating today. It's been about as participative as 450 plus people can be. So I'd like to thank you for that. I'd also like to thank most obviously our sponsors. Without the Hong Kong Financial Services Development Council, without our friends at the China Development Institute, these things wouldn't be possible. And it is amazing to see two large regions, Europe and the Bay Area, cooperating on this. And much more may it come. And very finally, if I could, I would like to thank my colleague, Mike Wardle, and the team for the preparation of the index and for the presentation today, Mike. I'd like to thank Dr. Yu for those very interesting insights from China and from Shenzhen. And Dr. King-Lun, thank you most especially representing the sponsor today and for participating in such an open and fun way. We really, really appreciate your insights. So with that, I'll say thanks to all, and we hope to see you in September, when we'll be doing index number 30, we believe. And for those of you who'd like to participate and provide your views, you can take the survey itself at the web link there below, globalfinancialcenters.net/survey. Thank you all.
Thank you.
Thank you.